Yesterday's filings also bring us to the end of the second quarter earnings season for the Nifty 50 at least. There have been more hits than misses this time, partly owing to subdued expectations and partly to corporate tax cuts. So the bottom line has looked okay. Darshan is standing by with the scorecard of the Nifty 50 companies. Darshan, morning.
Good morning, Neeraj. And you know, when we did it on the halfway mark, it looked really good. It was almost at a 3-year high, the scorecard. Now, at the end of it, some of the companies did manage to disappoint. So we are pretty much at a 3-quarter high now. But it's not been a bad quarter because the number of companies that came out with strong numbers was much higher than the weak numbers, and almost 50% of them came out with numbers that met estimates. So now take a look at the past trends, and you can clearly see that the number of weak earnings have gone down over the past 3 quarters, and the number of strong earnings, which was very good in the third quarter, has also managed to inch up over the last 3 quarters, and inline pretty much has remained same. So I wouldn't say it's been a bad quarter. The start was extremely good, but we didn't capitalize on that start, and the second half of the earnings season probably faltered a little bit. Now, what did well? I think there were 2 sectors that clearly outperformed. One of them was the auto sector. So except for an iShares, which was in line, all the auto stocks came out with strong set of numbers. And secondly, it was the banking stocks that did well. So most of them did well. IT also did well. IT usually came over the past few quarters, has been in line. This time around, it's a decent quarter from IT this time around. What didn't do well? You had your pharma space, which didn't do well. You had your metals, which didn't do well. And you had the oil and gas space, which didn't do well. So that's the trend. Apart from it, the consumption and some of the other counters were pretty much in line. So that's the broad scorecard that you have. In terms of some of the companies now which did well in terms of revenue growth, UPL grew, and this would be revenues or NII depending on a company which is on the financial side, it will have its NII. So UPL it was 84% up, but that was on account of consolidation of Arista, but overall the numbers were weak. You had the Bajaj twins which did well. IndusInd Bank came out with strong NII growth this time around. Dr. Reddy's came out, ICICI and Kotak. So you can see a lot of financials came out with strong NII growth this time. What didn't do well on terms of a degrowth that could come in, Maruti tops the list. It had a degrowth of 24%, but numbers were better than what the street was anticipating because of all the cuts that came in. The street had actually lowered its expectation. You had JSW Steel, Tata Steel, which also saw a decline as far as numbers were concerned, both on a yearly basis and a quarterly basis. And you had some of the oil companies which make the balance of the list here.
Okay, so Darshan, let's try and get into individual pockets, individual themes, individual sectors, and try and talk about them.
Yeah, so we'll start with agri. UPL was a disappointing set of numbers despite that big jump you saw. That was on account of the Arista acquisition, but there was weak sale in high margin geographies, and basically UPL is the only company here on the Nifty 50, and that impacted the numbers for UPL. The other theme was auto, which did extremely well this time around. Numbers beat estimates, except for an iShares Motors. Numbers beat estimates. The recent price hike provided some bit of cushion, and raw material costs were lower this time, and that aided the auto numbers. So auto as a pack did well. So that's that sector. The next sector that we want to talk about is basically the cement sector. The raw material price is there was pricing power in the north and west India, and focus remains on pricing. The only company on the cement space here is Ultratech, which came out with decent set of numbers. On the construction front, there was only L&T which came out with numbers. They held on to the management guidance, but the commentary was somehow muted. Numbers were in line, but infrastructure segment saw a decline in order flow. So that was a bit of concern on L&T, and it has been sliding since the number. Now you have consumption. Consumption has remained muted. Nothing much coming around, saying volume growth has been muted. Margins have been better because of input costs which have come off significantly, and rural recovery was the key. Say a lot of companies. So the growth that has come in was mainly on account of growth on the rural side. Some bit of companies that we also want to speak on the consumption name. First of all, Asian Paints was one of them. It's the 7th straight quarter of double-digit volume growth that came in. So Asian Paint continues to do well. And the second one was ITC, where the cigarette sales pretty much remained steady, and that aided the company this time around. So that's the FMCG. The big disappointment on the FMCG front was Titan, which fell 10%. They've lowered the guidance for the jewelry sales, and one of the key reasons, you can't blame them, gold at 40,000 rupees, sales simply didn't happen on the gold front. The next sector that we want to talk about is the oil and gas space. A mixed set of numbers. Refining as a pack disappointed this time around. Marketing volumes disappointed for some of them. So overall, it was a weak set of numbers on the oil and gas space. Lower taxes was clearly aiding the profit for the company. As for this was the banks. So banks this time around, asset quality was elevated, but no big concerns this time around. Life insurance play was extremely strong, and you had some of the NBFCs like an HDFC and Bajaj, the Bajaj twins, that did extremely well. So overall, no complaints for the financial sector. IT as a pack, revenue guidance for most of them did manage to disappoint, but some of the lower end. So IT was Infosys and TCS you leave aside, but the third, fourth and fifth number player did manage to surprise. Demand environment was muted but stable, so not a bad quarter from IT this time around. You had Z this time around, the only media company. Sun obviously was the other company not in the Nifty, but that also came out with a horrible set of numbers. But this came out to an exceptional loss this time around. But more than the P&L, it was the balance sheet concerns on Z in terms of the intercorporate deposits and the cash flows, which actually disappointed the street and spooked the market. So that was Z. You had the metals pack this time around, lower realization this time around, higher raw material cost dragged the operational performance. Vedanta on particular has cut the capex and volume growth this time around. The exception this time around was Coal India, which came out with a strong set of numbers, lower cost, and they came out with the highest ever FSA realization. So that was a hidden gem in the second quarter. The stock did manage to react. Mixed bag for the pharmaceutical company. US sales and Taro, both of them were weak by US. Cipla was the outperformer this time around. Dr. Reddy's was weak. The internals were extremely weak. So pharma, nothing much to talk about. Ports, obviously not the best of quarters. They've lowered the guidance. Forex was there. There was one-offs, a lot of adjustments, but overall not the best of quarters for Adani Port. And finally, telecom, no respite. Airtel reports the highest loss ever. Exit charges, other expenses aided Bharti Infratel this time around. And players say that the government help is very crucial. So despite the big loss that came out, I think operationally it was a strong quarter from Bharti Airtel, and it'll be interesting to see how it fares in today's trade.